start this outlook by going through a report in the research section of the terminal, which essentially explains the weekly recap of last week to a T. So yeah, I mean the AI rally dominated despite the geopolitical turmoil. Yeah, the market spent last week aggressively chasing the AI-driven equity rally while ignoring geopolitical tensions in the Middle East. Stocks surged to new records while the dollar weakened broadly on strong risk appetite. So yeah, I mean we'll get into this in more detail, but essentially equities continue to boom to the upside, especially ES, Nasdaq, which is signalling a massive rotation into the AI growth theme. So yeah, I mean if we look at the geopolitical backdrop here. So last week, Iranian officials publicly rejected Washington's timelines for accepting the proposal, and then US Central Command confirmed American forces had conducted self-defense strikes against Iranian-linked ports after destroyers came under attack in Hormuz. However, what's interesting is that the oil actually ended the week at $94, which was lower than anticipated given the developments that actually came out of the Middle East, which is interesting and kind of tells you how the market is fading the geopolitical risk premium as of now, which obviously explains a lot considering why equities are doing so well and we're seeing high beta currencies outperform. But yeah, let's get into the individual currencies this week. Oh, actually, the calendar. So for next week, we are looking at... So next week on Monday, we are pretty quiet. On Tuesday, we have inflation out of the US, which is going to be a big print. We are forecasted to rise by 10 basis points. And then we've got some Fed speeches. Scrolling down, we then have European employment data. And then PPI out of the US, which is obviously going to be very key to see how oil is bleeding into the prices and inflation as a whole. Thursday, we've got GDP out of the UK, which is forecasted to slip to minus 0.2%, which I think is going to be a very, very big print for sure, as we'll mention when we go over the pound. Retail sales in the US, and then on Friday, we've barely got anything on Friday, pretty quiet Friday. But yeah, that's essentially what we are looking at this week for the economic events. So starting off with the dollar, the AI Daily Bias mentions we are bearish. However, myself, I'm actually neutral, and I'm not really looking to take anything until we get some more clarity on what's happening in the Middle East. I mean, everything at the moment is looking positioned for US dollar downside. However, one tweet from Trump, and we could just be back to risk off with oil supported and yields rising. However, if oil remains soft, yields continue on a downward trajectory, which I will mention the dovish repricing from NFP, which we can see here. Non-event, however, slight dovish reaction considering NFP came in above consensus. So yeah, that's definitely interesting for sure, how yields actually had a more of a dovish repricing following the hawkish print, which for me kind of indicates where front-end yields are going to move over the short term. And you can overlay this with the MOVE index, which shows that as a whole, we're seeing softer yields, which is obviously benefiting gold, benefiting the Swiss franc, but we'll go into that. So yeah, obviously that is all looking for bearish dollar downside. However, institutionally, the Bank of America and Credit Agricole are actually both bullish on the dollar. So for me, I'm neutral, and I'd rather wait for more developments at the Middle East. However, if we look at the dollar and we go and have a look at Credit Agricole, is that... Goldman Sachs are long on dollar yen, so you've got some bullish there, but then you've got some, if we come down to here, long dollar here, so obviously Bank of America are long dollar, Credit Agricole are long dollar, JP Morgan are short dollar. So there's clear not conflict, but there's conflicting opinions out there from the institutions, which kind of tells you everything you need to know about the dollar, how essentially we are neutral and everyone is kind of waiting for there's not a clear consensus, unlike something like GA downside, which we'll get into. So moving on to the pound. So for the pound, I am neutral to bearish. I mean, equities are continuing to rally. Oil's remaining elevated, pushing short end yields higher, and we can expect to see the sterling supported at the start of the week due to this, in my opinion. However, GDP this week is forecasted to slip by about 70 basis points, which I think could definitely weigh on the pound and highlight the Bank of England's dual mandate of elevated inflation with a weak labour market and then slowing growth, which obviously we'll get from the GDP print if consensus comes in at minus 0.2%, which I believe will weaken the sterling for the rest of the week. Institutionally, UBS and ANZ are also bearish on the pound. I mean, if we just go to here, UBS are short on the pound, and so are ANZ. The ANZ are liking a short GA, targeting 1.85 by the end of Q2. So yeah, but for me, I'm expecting the start of the week to be GBP supportive, with the latter being bearish. So yeah, maybe up into Wednesday, and then we'll start seeing the print get priced in on the Wednesday, and then should continue to the downside. So I think stuff like GA is lovely to get into. GN, G Swiss, those are some pairs I'm looking to get into. Moving on to Europe. So Europe is quite simple this week. I'm neutral. Tariff concerns and softer global yields will keep the euro on the more bearish side of the coin. However, I'd only pair the euro against the franc, pound, and antipodeans this week. Obviously, all for not all for downside. Euro Swiss, Euro AUD, Euro NZD downside, Euro pound upside. So yeah, it's all dependent on the cross, and I'm leaving the CAD this week. I'll mention why. I am actually still kind of bullish, but I'm not a fan of what price action's telling me. So yeah, neutral on the euro. However, there are some pairs I'd actually take it with. Moving on to the CAD. So I am actually bullish on the CAD, which goes against the AI daily bias, but essentially upside makes a lot of sense for me during the heavy risk on influence over markets, as are now due to the rally in equities, specifically ES and NQ, as we mentioned at the start. And then this, coupled with elevated oil prices, which is anything above $80 in my opinion, is going to drive flows into the CAD. I think last week the CAD took a bit of a back seat, and this week we should see the CAD take some of its gains back. Data this week is on the quieter side, so we can definitely expect to see sentiment and oil prices decipher where the loonie goes, in my opinion. So yeah, bullish. AUD and NZD. So I'm bullish on both of these. I mean, upside in the Australian dollar remains one of the clearest conviction trades for us at the moment. The RBA hiked last week, taking their base rate back up to 4.15%, which obviously is widening rate differentials in Australia's favour. Consensus at the moment is that we're going to see a RBA hold in June and then a hike in the following meeting, which I believe is August, with even further speculation of another hike in September. So, I mean, it's quite clear that the trajectory for Australian rates is to the upside, which will continue to support the AED on yield differential crosses. And couple this with equities continuing to break all-time highs due to obviously CTA inflows, the AI trade, geopolitical risk premium being faded, we're going to see high beta currencies like the AUD and NZD perform, which should be the case. Another point is that the Chinese yuan is at a 3-year high against the US dollar, which signals major inflows into the antipodean currencies, obviously that being the Australian dollar and New Zealand dollar, as a proxy for Chinese markets. Data-wise, New Zealand's labour market last week showed signs of strengthening, and the RBA's hike, although had some slight dovish pricing due to hikes being actually pushed back, still makes the RBA the most hawkish central bank out of the G8 for now at least. So yeah, bullish on both of those. I think AUD and NZD are the highest conviction trades, at least for the moment. Yen, I'm not going to go over this too much because I'm just leaving it essentially. I mean, we've got fundamentals are all pointing to downside bearishness. However, we obviously have intervention, which is ongoing. So I want to leave it because you don't want to get caught out on intervention and get slipped 200 pips. So yeah, leaving the yen. And then the Swiss franc. I am bullish on the Swiss franc, as the AI daily bias actually says. We've got global yields cooling, evident from the correlation between the Swiss franc and the MOVE, which obviously the MOVE index measures global volatility in the bond market. It's like the VIX, but for bonds, which indicates that flows are moving into the franc amid softer global yields, which is obviously going to keep gold supported as well. So yeah, even with equities booming, the franc last week was the second strongest currency, which kind of really tells you everything you need to know about what's driving the Swiss. That being global yields, of course, because it's not sentiment. Otherwise, the Swiss would have ended in the bottom 3. But the fact it ended in the top 2 really does show what's driving it. And even institutionally, Goldman Sachs remain a buyer of the Swiss franc. So yeah, bullish on the Swiss franc this week. And yeah, I believe that is everything. I mean, if we just have a look at what Goldman Sachs have said. Goldman Sachs, yeah, short Euro Swiss. They're a fan of CHF longs. So yeah, that is essentially the macro this week. Now let's get into the technicals. So starting with the AUD. Australian dollar against the New Zealand dollar. I think we had a nice bounce from here, but it's lacking momentum. So I think what we could see is a nice push down here, and then we go. That's what I'm forecasting. So yeah, something like this. We come down here, bounce around here, so 1.205 or 2.075 even, and then we get a bounce to the upside. I like the look of this. Euro AUD. I think this level is very, very nice for shorts. I want to see maybe 1.063 I'd get in for some shorts there if I actually mark out this level. $1.063. Yeah, I think a bounce from here will be great. Euro Swiss. This level here seems very key. We rejected off it last London session on Friday, and I think if we do come back up to this region, we'll reject again. And I'm targeting the 9125 because I think we could get a bounce from this level, just from a positioning standpoint. Euro pound, I like upside. Obviously, as mentioned, I'll probably only be looking to take upside from Wednesday onwards. But I think these levels are nice. You obviously could have caught from these demand zones last week. G Swiss, I think this level's really nice. If not, I'll be looking to get in from around this demand zone up here, which could be the play, to be honest. We've got these highs could get taken out off the open. I believe that's everything. Oh no, we've got 2 more. GA and GN. So GA, I really like this level here. GN, similar, but there's not much structure to go off. So I'd prefer to take GA, in my opinion. But yeah, a much shorter watch list this week, just due to me wanting to be more in and out with high conviction plays over trading everything I can get my hands on. But yeah, that's essentially what I'm looking at this week, technical wise. And yeah, as always, drop a comment, drop your outlooks in the Discord. Free Discord, go on our Instagram. We've got a link to the free Discord, and we've got a link to the newsletter. So in this newsletter, it's a free newsletter. Go on the website and you can actually, we'll give you emails that tell you about weekly recaps, what the institutions are looking at for the week ahead, so obviously trade setups, and then also potential discount codes and early access to features on the web app. So yeah, that's essentially what we're looking at this week, and that's the newsletter, which I'd advise signing up for. I mean, if I had something like this when I started, I would have been all over it. But yeah, that is essentially this week covered, and I'll catch you in the next week.